Hi there, welcome to kneppyinvest. We are in that part of the year, and some people would call it confession season, when companies are releasing trading updates, profit upgrades, profit downgrades. Management of these company come to realization of how the company they are managing is performing financially. And when they come to this understanding, they have to reveal this to the market for full disclosure. I've already done one video on a profit upgrade. That was DGL Group. And in today's video, I'm going to look at another company called Brambles. This is a fairly big company, market cap of $15 billion, been on the ASX for about 16 years. I've briefly looked at this company, and the only thing I know about Brambles before doing a little bit of research for this video is they're the pallet company. So let's get stuck into looking at the profit upgrade for Brambles. And because this is a profit upgrade and it's my favorite type of announcement, does this mean Brambles is a buy right now? So I'll talk about that and also talk about why I'm not going to take a position in this company, even though they did release a profit upgrade. Though I always have considered Brambles, even though I've done much research on this company, as a pallet company. That's all I picture when I think of Brambles. They themselves call the company a supply chain logistics company. And the two most important words in the explanation of this company, the description of this company, is supply chain. Those two words have been in the news a lot lately, supply chain issues, and possibly that's one of the reasons why this company released a profit upgrade. Founded in 1954, Brambles listed on the ASX in November 2006. The current CEO has been in the position for about 5 years, Graham Chipchase, and the market cap of this company at $10.82 is around $14.5 billion. And the ticker code for the company is BXB. I thought maybe I was being a little bit unfair on Brambles, just considering them as a pallet company. But that is something they do. That is a part of their business model. So this particular graph I've shown you here, or table, or whatever you want to call it, I found on their website. And it's a great representation, explanation of what Brambles actually does. They have pallets, containers, RPCs. So Brambles provides standardized pallets, crates, and containers to customers from its service centers as and when the customer requires. The customer then uses this equipment, and Brambles support services to transport goods through the supply chain. So again, supply chain logistics. And the customers either arrange for the equipment's return to Brambles or transfer it to another participant for reuse. So that is exactly what Brambles does. They are the part of the supply chain logistics, dealing with pallets, containers, and crates. There is one big reason why I don't have much interest in this company. This is the yearly data for Brambles since they listed on the ASX way back in 2006. We have 16 years of data. I'm looking at revenue here, cash flow from operations, and also gross margins. First thing I always look at is revenue growth. So even if you compare the start position or start date, a revenue which was 3.5 billion to the revenue they received in the past year, which was 5.2 million, you can say, if you draw the line there, revenue has been growing since they listed on the ASX. But in 2012, Brambles had revenue of 5.6 billion, which was more than what we've seen in the past year. So since 2012, revenue for this company has gone sideways. Could even maybe argue it's been drifting down. Same thing is true for the cash flow from operations. It has been growing very slowly. In fact, the most recent operating cash flow for this company was the record cash flow. So there has been a very slow growth in the cash flow from operations. This company does give dividends, and dividends have been growing very slowly, has been quite lumpy over the past few years, but before that, dividends were growing at a very anemic rate. If you look at the gross margins, from about 2006 to say 2011, gross margins were fairly high. Then they slipped off to a low in 2013 at 32%. But ever since that low in gross margins in 2013, they've been slowly climbing again, and right now at around 34.8%. So nothing right here gives me any excitement. No significant growth in revenue or cash flow from operations. And the same can be said for gross margins as well. So this is one of the reasons why I have never invested in Brambles, and probably one of the reasons why I will not invest in Brambles right now, just because of a profit upgrade. Now let's have a look at Brambles trading update, the profit upgrade. And this was titled Sales Revenue Up 8% at Constant Foreign Exchange. Now, Brambles have operations in 60 countries, if I remember correctly. So foreign exchange is very important. They will report their financial data in American dollars. So foreign exchange is very important. If Australian dollar goes down a lot, this company will benefit. On the flip side, if we start to see strength in Australian dollar, this company will not benefit from that. And this has been a big factor over the past 10 years on the performance of some companies that have major part of their operations overseas. So you always have to look at foreign exchange rates. Now let's have a look at, well, the other part of the announcement titled was Upgrade Financial Year 22 Sales, Underlying Profit and Free Cash Flow Guidance. So let's have a look or how this guidance has changed. Sales revenue was expected to be between 6 and 8%. Now they expected sales revenue to be 8 to 9%. Underlying profit growth, excluding short-term transformation costs, is now expected to be between 11 to 12%, up from 8 to 10%. Now the free cash flow, and this was interesting. So this is the first time I have really looked into Brambles, and they are expecting to be free cash flow negative for the year. Previous guidance was expected to be negative 350 million. Now it's only 300 to 350 million. And the reasons why they expected to be free cash flow negative for the financial year is because of the extraordinary levels of lumber inflation and additional pallet purchases due to extended cycle times and lower pallet returns in all regions. So that's probably not the best thing, that they are expected to be free cash flow negative. But this isn't about them being free cash flow negative. They've already announced this to the market. This is just a change in the expectations. And that's what the market is looking at. And that's why the share price of this company rose, I think it was about 6 or 8% on the day they released this announcement, because the expectations of management have changed in regards to the financial year 22 performance of this company. Now, to another reason why I don't really have much interest in buying into this company on the back of this profit upgrade. If we look at the chart for Brambles, and this is the monthly chart. So a lot of times I'll just look at the daily and the weekly chart. This is the monthly chart since they listed on the ASX towards the end of 2006. And the share price high for Brambles was in 2007 when it reached $15. And this company was affected by the GFC. Share price dropped from $15 all the way to a low of $4.50. In fact, it almost reached $4 at one point. So that was the all-time low in the share price of this company. And then between 2009 and 2016, a 7-year period, there was a nice little uptrend in the share price of Brambles. It increased from about $4.50 to $13.50. So that's a tripling in the share price over a 7-year period. So that was a good time to have Brambles in your portfolio. But ever since the share price reached that, was say not the high in the share price, but the most recent high back in 2016 at $13.50. Share price has been trading in a range between $9 and $13.50. So just after it reached $13.50 in 2016, share price pulled back to $9 and then went sideways for about a year. Share price then reached $13.50 again in 2019 and then pulled back during the COVID-19 financial panic right to $9. And share price has been trading in between those two share prices, $9 and $13.50, ever since then. And right now, share price is around $11, so sort of in between the top and the bottom of the range. So no well-defined uptrend, not only in the monthly chart, but also when you look at the weekly chart. And the daily chart, share price is not at a 6-month high, it's about a 4-month high. So that's another red cross. So even though the market did react positively to this announcement, it's only a 4-month high in the share price. And at this point in time, I see no reason for me to take a position in the Brambles simply because of the chart, simply because of the financial state of the company. But maybe just maybe, this is the start of an upgrade cycle for this company, and maybe we'll start to see significant growth in the revenue, significant growth in the operating cash flow, potentially even significant growth in their gross margins. But that remains to be seen. At this point in time, it was a nice profit upgrade, but not the sort of upgrade I think you can or should expect the share price to react and take off from here. If the share price does move towards $13.50, that would be a possible selling point because it's reached the top of the range. And if it moves above $13.50 on strength, that would be a fairly bullish sign. On the flip side, if the share price moves towards $9, that could be a nice low-risk buying opportunity, sort of trade the trading range. And if the share price falls below $9 on strength, that would be fairly bearish. So at this point in time, I don't think Brambles is a long-term hold. The only reason you might have Brambles in your portfolio is if you just trade the trading range it has found itself trading within during the past 6 years. That's all I have for this profit upgrade video on Brambles. Now, I have decided whenever a company releases a profit upgrade or even a profit downgrade, I'm going to take a closer look at the company and then decide whether this is a good opportunity to buy into the company, because profit upgrades are the most powerful sort of announcement a company can release. The question is a profit upgrade a company release as a one-off, or is it the start of many profit upgrades the company will release? And if it is the start of many upgrades, that is the time to take a position. Unfortunately, we don't know the future, but sometimes you're going to have to bite the bullet, take a position in one of those companies. And if you do, and the company does release more profit upgrades, that is when you see significant growth in the share price of that company. We've already started to see that with DGL Group. They've released 2 profit upgrades in 2 months, and we've started to see the share price really take off. If you have any questions about Brambles or maybe any other company that has released a profit upgrade or even a profit downgrade over the past few weeks, I'd love to hear your opinion, your thoughts, or even your questions. So leave that in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.